Anand Swaminathan is with us. He's, of course, Senior Research Analyst at Bank of America Securities. He tracks the financial space. Anand, good morning. Good to have you with us here. Thanks for your time. You know, the conference is on. You met foreign investors. It's a sector which sort of FIIs go into first when they want to sort of express a view. Do you think interest is coming back, especially for private banks, is likely to come back in a meaningful way from here on? Go on.
Absolutely. I think what we are seeing is good bullishness on the macro outlook for India, and to some extent foreign investors are waiting for continuity post elections. Once that is done, we think more flows could come into the financial sector, and in the last few years all the FII outflows, more than half of it was funded by the financial sector. So whenever the flows come back, we do think the financials will benefit. And this time around, interestingly, we are seeing more interest in the government-owned banks as well. And we think that is a structural play which can continue to work over the next few years as well, over the medium term.
But, you know, SBI went up 10% yesterday. The moves that we saw yesterday, is that something sort of specific with regards to this or that? Or is this just an expression of the positivity with regards to India? And are you getting a sense that especially for names like HDFC Bank, ICICI Bank, actually, of course, Kotak as well, the same amount of interest can creep in over the next few weeks?
Absolutely. I think, the starting point is a very low investor positioning in the government banks. That's why we saw a higher move up for them yesterday. But in a broader sense, government banks will be the primary players whenever the capex cycle, the private capex cycle picks up in India. I would say that is driving a lot of bullishness at this stage. But eventually, all the big banks, I would say the big private banks and the big government banks, will benefit from a stable macro, and a capex cycle will benefit players across the board. I think it will get broad-based soon, but at this stage, it's driven by stocks which are under-owned, I would say.
All right. Hi, Anand. Good morning and good to see you in. Nigel on this side. You know, one query that we normally get is, are the ROEs of these PSU banks peaking out? And will credit costs slip from here? What's your comment on that? You know, many believe that bulk of the good news is in the price and things will slip on both these two factors from here. Your take?
Sure. See, ROEs can potentially peak, but it doesn't mean they're going to come down very fast. And that is where the continuity on the macro and the asset quality outlook matters a lot. And from the ground, we are not seeing any pockets of stress, which is meaningful, which can turn this story around. And this time around, what is changing is with the digital ecosystem and the approach from the regulators as well. The banks have been a lot more cautious when taking on new risk. I think what this means, a combination of these two, is the cycle could be a bit longer. And eventually this will mean higher multiples for the banks as well. But at this stage, we all go back and think about previous cycles and think things might turn quite fast. That doesn't have to be necessarily the case. And lastly, because the rate cut cycle seems to be pushed out, that also helps bank ROEs. That's also a positive, I would say, over the next few quarters for the banking sector.
Anand, hi, morning, this is Surabhi here. And that's really the big question. The narrative on valuations is well understood, and everyone knows that valuations are on their side, these big blue chip bank stocks, private bank stocks. On the fundamentals, is there any reason to doubt a bigger move or a bigger recovery? Is there any reason to believe that maybe investors will keep allocating more to the PSU side? What should we watch out for? Fundamental triggers, the critical ones that could set the trajectory ahead for private sector banks.
Sure. I think two fundamental triggers that are going to be important over the next few quarters. One is capex cycle. And theoretically, we would believe the public sector banks are the ones who benefit from this in the initial 1 or 2 years. And then the private banks take it up from there. But the broader theme, Surabhi, for the next 1 or 3 years in India is going to be the tighter liquidity, and more importantly, the competition for deposits, which is where the government banks have a leg up. And only the private banks who have a sustainable liability strategy and who are able to get deposits from the retail depositors are going to win this game. And that's why we have a preference for the bigger private banks, where we think they have the franchise and the digital products to get in those deposits. I would say between big private banks and public sector banks, it's quite balanced in terms of fundamentals. The rate cycle and liquidity will probably decide the balance over the next year.